Our team, orchestra from IPMI EMBA March 2022. Joseph,
Fanny,
Irma,
and Irwan.
we are introducing the great book about investment, One Up on Wall Street by Peter Lynch. Let's go in.
Hai Bapak Ibu. So,
Hai.
how is your day off last Saturday?
I'm Idul
yeah,
Adha, Bu.
Good.
Good, Bu.
good.
So actually, I went to the mall last Saturday and I went to the bookstore. I think I found an interesting book about stocks, about investment. It's One Up on Wall Street. Have anyone read it? The book is written by Peter Lynch. Do anyone knows who is Peter Lynch?
Okay, let me introduce the writer of this book to you guys. He was born in 1944. His occupation was investor and mutual fund manager, managing Magellan Fund and Fidelity Investment. He was hired as an internship in 1966, and in 1969 he was hired permanently and he started work as a research staff in an analysis team. In 1974, he became Fidelity's Director of Research until 1977. In 1977, he was nominated as the head of Magellan Fund with 18 million US dollar in asset. He made averaged annual return about 30%, which was more than double the S&P 500 stock market index. By the time he resigned as a fund manager in 1990 for 13 years, assets under his management increased to 14 billion, 778 times. Isn't this incredible and awesome, right? He wrote 3 books. One Up on Wall Street is the first one we are reading. This is served as theory. The second and the third one are Beating the Street and Learn to Earn. These books were written for the application and for the beginning investors, respectively. You can read for the deep understanding of Peter Lynch's perception on the investment. I know, Fanny, you are very smart auditor in your company now. Can you share some important numbers in stock analysis?
Wah, thank you for the compliment, Pak. So let me try to describe about some famous numbers used during stock analysis. Okay, so I think there are some famous numbers used. For example, like for the percentage of sales, like if you interested to a company due to a particular products, you need to find out whether what is the product means to the company, representing by the percentage of sales. It would be better if the products contribute a huge percentage of the sales. Okay. Other numbers such as for the PE ratio. PE ratio basically represent whether the company is fairly priced or not. The company that is fairly priced will equal its growth rate with its PE ratio. For example, if PE ratio is 15, so you can expect that the growth rate of the company will be 15% per annum. So if the growth rate is higher than the price earning ratio, then you can consider the stocks is a bargain. So you also need to see the cash position, and also the debt factor. One quick way to determine the financial strength of a company is by analyzing debt to equity ratio. Companies with heavy debt are always at risk. The other numbers you can found or you can consider is about the dividends. Stocks that pay dividends are often favored over stocks that don't pay dividends. Dividends actually affects the value of a company and the stocks over time. And while you are reviewing the financial statement, you should notice about the hidden assets as well, such as for the inventory or natural resources. Those accounts are recorded on the books with the numbers they actually paid around 30 years ago, while today's price had been rocket up. Another example is goodwill. Like goodwill is the intangible value of franchise and should be amortized, while in reality the value of the franchise is rising by the year. So the next numbers you can analyze is about cash flow. Cash flow basically is the amount of money a company takes in as a result of doing business. So if cash flow is one of the reasons buy stocks, then make sure that you are reviewing the free cash flow. Okay. Next is inventories. Basically, when inventories grow faster than sales, so it's a red flag of especially for the manufacturer or retailer. Pension plan also you need to understand, you need to take a look of this account, because you need to make sure whether the company that you are intend to invest don't have excessive or overwhelming pension obligation in the future. When the company goes bankrupt, it must continue to support the pension plan. You need also to take a look about the growth rate. So next you also need to take a look about the growth rate and also the bottom line. I think you will want to invest in the company with positive bottom line, right? So it means the company is generating profit to you. I think that's some of the analysis you can use to pick your stock. But yeah, sometimes I know news or rumors sometimes more intriguing and more interesting to us. So actually, despite I can tell you about the analysis about some famous numbers you can use to invest the stock. So like I said before, I got some tips, I got the news, and then I decided to invest quite a big money in one big company. Now the company had problems with its financial director's embezzlement. So yeah, let's just pray and hope it will get better.
Oh, Bu Fani, I'm sad to hear that rice has become chicken porridge. Life must go on, Bu. I will explain about design a portfolio. Yeah. Okay, I will explain about design portfolio of stock. Don't put your money in one basket. Split as much as possible. Normally 5 until 10 stock to optimum focus, and maximum 12 stock. Maximum 40% asset in to growing stock because significantly growth above market. Be careful. Choose your style: conservative, moderate, aggressive. Starting from different types of industry and stock. On the previous point I mentioned about basket, make sure split stock to save your money. Buy stock what you know and make sense story and price. You can utilize Google to search information and news about company to choose. And the last one, let's try. I'm curious, how about the most dangerous thing in stock price?
Okay, Pak Irwan. From the book, there is about 12 item which we can understand about the stock prices. Number one, if you want to buy an exciting name company, then you get the overpriced stock. Number two, one can always tell when a stock hit bottom. Number three, if a stock has gone high already, how can it possibly go higher? The fourth, there's not much to lose if it only $3 a share, whether a stock costs $15 a share of $1 a share. If it goes to zero, one will still lose everything. Number five, price always come back eventually, which is also not true because lot of stock don't come back. And then number six, there's a tendency to believe that there is always darkness before dawn, which means that if things have gotten a little bad, it can get worse. Number seven, when the stock rebound to higher level, the investor plans to sell. No downtrodden stock ever return to the level at which you decided to sell. Number eight, why worry? Conservative stock don't fluctuate it much. There is no stock that one should afford to ignore because companies are dynamic and prospect change over time. Number nine, it's taking too long for everything to ever happen. Patience is the key to create wealth, so it is important to be patient. Number 10, look at the money I've lost. I didn't buy it. One doesn't really lose anything by not owning a successful stock, irrespective of it being a 10-bagger on Wall Street. 11, I missed that one. I'll catch the next one. There is no next Home Depot, no next Amazon, no next Costco. I missed that one. I'll catch the next one. There is no next Home Depot, no next Amazon, no next Costco. The 12, the stock gone up, so I must be right. Or the stock gone down, so I must be wrong. Don't confuse price with prospect unless you are a short-term trader looking for 20% gain in the short term. I hope my explanation, not my explanation, I just read from Peter Lynch book. I hope this explanation can make you understand. Thank you.
Wah, Bapak Ibu, thank you for the explanation. I got a complete view about the books already. Yeah, actually, I've made a mistake by buying a stock based on news, not analysis, while like Pak Joseph has mentioned that we need to get a fact about the stock and get to analyze the reports before doing investment in some stocks. While I also understand that there are some ratios and some numbers needs to be reviewed and need to be analyzed before doing the investment. And Pak Irwan also thank you for describing about how to building a good stock portfolio. And Bu Tiarma, also thank you for reviewing some parts of the books, and I got a really good insight for that. Like Pak Irwan said, rice has become chicken porridge. Okay, so hopefully I can cook another rice in the next year based on the information today. Okay, thank you very much, Bapak Ibu. And I guess we will see each other in the next class next Saturday.
And then we'll take picture. Okay, ready? 1, 2. Thank you very much for being a passionate learner and also becoming the great grandchildren of the Nobel Prize winner, and then you learning the Greek symbol for your name. Yeah. Okay, stay safe, stay healthy, stay happy.